Next up, it's Emmerson, who've been developing the Khemisset potash mine in Northern Morocco for a number of years now, and recently raised £5.5 million to be spent on initial groundwork for the mine site, including the initial construction of the mine decline and detailed plans. The Khemisset potash mine is often described as a low-cost, high-margin project, and Emmerson CEO Clarke is hoping construction work begins by the end of the year. Tonight, we're joined by Clarke, CEO, and Charles Vaughan, his head of corporate development, and together they're going to explain why Khemisset is a fantastic project.
Okay, thank you, Donald. Good evening to everybody that's listening in, and hope you enjoy our short presentation, and then we'll take questions after that. So we'll just flick to the first slide. Okay, so this slide will just show here the highlights of the project. Tonight we're just going to focus on the highlights and then a few of the aspects that add value to the project, but also underpin the sort of fundamentals behind the project. So from our feasibility study, which was completed last year in June, the project in production of 1.1 billion MPV8, and that's actually taking a more conservative price assumption than we did in the feasibility study. So that's with a potash price of $360 a tonne. And we'll talk a bit more about the potash price, which I know is something that interests a lot of people, along with the market. So we'll cover that off in a bit more detail. But where we'll be, because of the nature of the development, combination of the location, the geography, but also the geology, we will be in the lowest quartile in terms of MOP producers globally, which to a large extent actually makes price assumptions and forecasts irrelevant to us to a large extent, because we will make money, wherever the price sits once we're into production. One of the key things about the location of the project: first-rate jurisdiction in Morocco, very supportive of foreign direct investment, and particularly in the mining sector. And the geography, as I've said, the location very close to the port of Casablanca and other ports on the Moroccan coast, which gives us easy access to any of the markets around the world. And again, we use an example and compare our costs of shipping to Brazil compared to the large Canadian producers. But the reality is that our product will probably stay a lot closer to home, because Morocco itself is currently importing 700,000 to 800,000 tonnes of MOP per year. And we will actually be producing around that amount in country once we get started. Initial 19-year mine life, and that's from less than half of the resource that we've identified, so significant potential to increase the life of mine. And we'll be the first MOP producer in Africa, which is really key when we look at where our product is likely to go in terms of the market. As I've said, Morocco is importing a significant amount of MOP, but Africa as a whole, where a lot of the world's available arable land, agricultural land exists, the application rates of fertilizers on that continent are very low compared to global standards, and will have to increase for us to be able to meet the challenges of food security around the world. So this slide, we've talked about SOP production as an add-on to the project for some time, and we did some initial scoping study level work. We've actually kicked off a detailed feasibility study into the SOP project. But it really does stand out as another, huge opportunity, and it's because, again, of the location, close to the port of Jorf Lasfar. And if you're converting MOP to SOP, the higher value potash product, you need sulphuric acid, and at this location, there's a ready supply of sulphuric acid, and also the opportunity to, the byproducts that go with the process, the Mannheim process, in converting to SOP. There's also the byproducts, there's a market for those locally as well, which makes it a fairly unique location to actually build an SOP project of the type that we're looking at. Standalone, it's $100 million plus MPV, but it gives us flexibility and access to another part of the market. And we've been undertaking some work looking at a phased approach to the development of the project, but very importantly, as part of that work, the expansion opportunities. And adding an SOP plant is obviously one of those. And we'll be updating the market on that specifically in the not too distant future. But it just demonstrates that Standalone project with MOP as per the feasibility study. We do have a significant opportunity adding SOP as a second product. And also on the next slide, we talk about the opportunity with the de-icing salt. We've made assumptions in the feasibility study that we would, as part of the process, produce 1 million tons of road de-icing salt, which we could ship to the northeastern seaboard of the United States. Annual market there, 8 to 10 million tons for de-icing salt. We have an opportunity to increase our level of production up to around 4 million tons of de-icing quality salt, and also the potential to increase a higher value salt product if we so wish. It's a good market, fairly stable pricing that fluctuates depending on how mild the winter is or how severe it is, but around $40 a ton. And we can get our de-icing salt from the site to the northeastern seaboard of the United States for around $20 a ton. So that gives us a significant opportunity. Every ton we sell, that margin goes straight to the bottom line and puts us even more firmly down at the bottom of the potash cost curve, which is really, really important to us. So just talking a bit about what we plan to do this year. The year started well with the gaining of the mining license. That gives us sign-off from the Moroccan authorities to develop the resource that we've identified. And to get that mining license, you have to have done the exploration work, having previously held exploration licenses. Done the exploration, you've got a resource identified, compliant to one of the standards, at JORC in our case. But you've also done a feasibility study to demonstrate that you can economically extract the resource, which we've done. So effectively, it's sort of government sign-off that we've done all of the work to demonstrate that there is an economic project. So that was a great start. The next key thing is the environmental permissions. We've done all of our environmental social impact assessment work to World Bank standards over and above what Morocco would require in the country. So we've done that, to the top standards, and we're well through the process now. Submitted all of the documentation in November last year. We've been through the public inquiry period, and now there's a series of meetings with the authorities, and we expect to have that permission in the next month or so. Next two things really key to taking the project forward into construction, which is to bring in a strategic investment partner. So that's either coming in just as an equity partner to help us with the equity part of the funding that we need to raise, but also potentially, and we've got a number of conversations, very positive conversations going on with potential partners who would come in actually with an interest, more of an interest in the project and the product, importantly. And we'll talk a bit more about the importance of being an independent producer later on. And alongside that, we're working on putting together the debt side of the funding and pulling together a banking syndicate who will support us with the project finance that we require. And the intention there is that in Q3 we'll have those things in place. And the idea is then we can start construction before the end of the year, which is our target. Alongside the funding, obviously we will need to sign offtake for the MOP. That will be important for the banks. We've been holding off on signing off the product. We know that we can. Any fertilizer trader would be very happy to take all of our product. Fertilizer traders can't get their hands on potash because the big producers control the market and the sales. So we know we can sign off takes. What we're doing is holding that as a trump card in ongoing discussions with potential strategic partners who are fertilizer producers who would actually like to get their hands on that product. So that is really important to keep that for the time being as those conversations progress. And also we look to get some sales contracts for the de-icing salt in place, and there are discussions ongoing with regard to that. And as I've said, look at the opportunities to actually increase the sales above the 1 million ton assumption that we've made previously. Complete the SOP feasibility study, as I've said, and the target is all of those things in place, start early construction works before the end of the year. And that's, it's quite an aggressive target. It's a big year if we tick off all of those milestones. But one thing that the project has successfully done over the last couple of years is actually hit the targets that it sets. and deliver against the milestones that we identify. So we're very confident that we'll be able to get to the position where we can actually start construction during this year. I'll hand over now to Charles, who's just going to talk a bit about the potash market and pricing, and I'll finish off the presentation with the last couple of slides in a few moments.
Thanks, Graham. So we've got a lot to do, and the financing of this project is obviously a formidable hurdle. But I think it's important to sort of understand that the backdrop here is now really in our favour. It's gone from quite a horrid headwind in the last couple of years to what looks like is a sustained tailwind behind us, which is the excitement around the need for more potash, which is always something. It's a commodity which people find quite difficult to assess and gauge what the real demand and supply is for it. You don't get an LME price on it. You only get snapshots here and there and what you read of other producers and what they choose to disclose. But what you can see is on live prices is the main demanders of it, which are the crops, and the main uses wheat and corn and soybeans. And as you can see, in the last 1 year, in the last 5 years, these prices have really been marching higher. And of course, what that means is the farmers in all the areas of the world that we're going to be addressing they scrabble to increase their yields, and they got more money to buy the inputs, the fertilizers, to increase their yields. So what you'll tend to have is these prices as a lead, and then the lagging 6 months behind or a year behind, at least a season behind, is the potash demand coming through. So if you're worried about the potash price and there being too much supply and it always being a moribund sort of commodity, look at the farmer prices they're getting, and then just understand that they are just calling on more and more potash, and that effect brings it up. So that tailwind is super important. There's roughly 75 million tons a year of MOP, which is our main one, consumed a year. On average, people are calling for 2.5% demand growth a year, and there is no reason to expect that demand to falter. It's obviously a function of population growth and also the changing sort of dietary fads as people get richer. So we're very confident that you're going to see this demand carry on, and the reason we put it like that is the supply is something to keep an eye on, but the demand, and in context of that demand of 1.5 to 2 million tons a year of new potash, the project, though it's sizable, that we're bringing on is really as nothing in the world picture of what is required, as you'll see. So we wanted to address this thing of there being too much capacity in the market, and the one that people always are sort of aware of as this big elephant of will it, won't it, is BHP's Jansen project, which is in Canada. And so if you look in the context of what's happening here, BHP has been deliberating for a long time over whether to build Jansen. It's in that big potash belt in Saskatchewan, and it's supposedly going to make an investment decision mid-year. So we'll see that. But this is something that not only won't kill the potash market, it is totally necessary for the future of supply meeting what the demand is already going to be. So what I mean by that is BHP has done a huge study on potash along with other people. We quote in our in a lot of our numbers of the long-term price of 412 a ton, which is 412 landed in Brazil. That's from the industry leading experts, Argus. So that's not our number, it's theirs. Look at BHP, who's actually in the business of building this mine or deciding whether to build this mine. yeah, it's a big mine. It's 4.5 million tons if it produces at full capacity in a 75 million ton market. But if they do make the decision, they'll start it in 2026 and they'll ramp it up such that it's at capacity or approaching capacity by 2030. And they'll do that on the basis that at Vancouver, the price they get is $327. That Vancouver price is the lowest price in the world because that's where all of the Saskatchewan potash has to start, and then it has to find markets. So in rough numbers, Brazil tends to be $80 higher than that. So BHP's numbers actually correspond to Argus's. And if you just do a rough calc on it bringing on its 4.5 million tons by 2030, you know, really the world will, just going back to that slide before, it will have needed 15 million tons a year of new supply anyway in that time. So we are very comfortable that though the potash market is well supplied, the demand, because it just keeps on growing, and we do not think that's likely to change unless population stops growing, it's going to require not only our project and BHP's, it's going to require lots of projects. And I think that you come back to Graham's point about where we sit in the cost curve, and this is a project that is going to work. And you know, it's largely because of the geography, and we keep making this point about the logistics, but this is where we come in under all these guys with excellent mines and excellent mine gate costs, but actually landing it in the markets they want to go to. All of the other expenses come in and make us actually far more efficient, actually landing it in Brazil. And as Graham mentioned, there's a good chance that we don't even have to ship it to Brazil in the end, but we'll see.
Okay, 1 more minute, chaps. 1 more minute.
Okay, well, we'll be very quick, Donald. So this slide just simply looks at, you know, the market it's very well established, it's very well controlled. All of the production of MOP is in the hands of a few large players. It has been for years. They basically control the supply to match the demand, you know, which is gradually increased, as Charles has said. As an independent producer, we will stand out. There'll be a lot of the fertilizer producers who struggle to get hold of potash, other than from their competitors, the big potash producers, will be very keen to take our product. So we have no concerns over selling the product, and we will actually be, you know, strategically important as an independent. And then we'll just flip to the last slide, and I'll rattle through that so we're done in time. Okay, so just in summary, it's an outstanding project in terms of the economics. The location and the geology, you know, underpins that. It's low risk, low capex development, and the logistical benefit of its location is what puts us right down at the bottom of the cost curve. We have the opportunities. It's not just going to be MOP and SOP and salt. So the 3 products we'll be selling, and our target, aggressive target, start construction before the end of 2021. So we'll leave it at that and be very happy to take any questions you may have.
Okay, fantastic, chaps. That was terrific. What a great project you've got there, Graham. Okay, Mark Savvy asks, how are you planning to power and fuel the site, the Khemisset site, given its remoteness?
So, you know, this is one of the things about Morocco. It has great infrastructure, and it stands out certainly by African standards. We're less than 15 kilometers from the main power distribution network. So we have a short link in, and we've got an MOU signed with a renewable energy company who would supply all the power that we require for the project. So, you know, the infrastructure in Morocco is great. There's a highway passes right next to the site, so it's simply a junction, and we're onto the highway to take the product down to the port. And as I've said, the power distribution network is really close by. So a very low cost for us to actually link into the main infrastructure to serve the project.
How long have you guys actually been planning this project? Because I presume those are the sort of things which will have, yeah, you'll have inherited the solutions to those things, I suspect.
Well, yeah, I mean, the team have been working. I joined in July last year. The feasibility study was already done, so all of this work had been covered off. But it's been 2 or 3 years work for the team. We've got a really good team based in Morocco. Moroccan nationals who, who interact with all of the authorities. We've built up great relationships in country. So, the project has moved a long way already. And this year is a big year to finish the permitting and get the funds in place so that we can actually start construction.
Okay, you mentioned permitting, yeah, and in your presentation, you talked about environmental permits as being one of your big milestones. Can we expect them next month? Can we expect them the month after that? Or is it just not the sort of thing that you're privy to? Well,
we've always said we'd get both the main permits in the first half of the year. So we've already got one, earlier than that. And we are confident we'll get the second. It's one of those, you can't put an absolute time on it. We've made great progress. There were no issues raised in the public inquiry phase. So we're confident it'll be in the next month or two, and certainly in the first half of this year, there's no concerns about that at all.
Is it worth putting into context the Northern Morocco and the site? You are pretty far away from anywhere?
Well, the actual site is it's actually in an agricultural area, but we're 80 kilometers from the coast, the northern coast of Morocco, 150 kilometers from the major port of Casablanca, where there is excess capacity for shipping. So we have no sort of port infrastructure costs required. And we're going to truck the product down to the port. And from Casablanca, we have access to all of the major markets. But as we've said, our neighbours are OCP, the largest phosphate producer in the world, Moroccan parastatal. They've got 20-odd thousand employees, massive company, and they are currently using 300,000 to 400,000 tons of MOP per year, all imported, to make NPK fertilizers. So we go into production. We have a ready market in Morocco for the product. So it doesn't, the likelihood of it ever leaving Morocco is fairly slim in reality.
So OCP are a potential strategic investment partner. I don't think that's a particular secret. So what stage are discussions with them? Or are you having similar discussions with as many other people?
Well, there's been discussions on and off with OCP for a couple of years. We have been recently talking to them again. And, we're in the process of discussing what the opportunity may look like. They're obviously interested in the product, but we're having similar conversations with other fertilizer companies who are interested in the products that we have. So the way we're approaching this is that, the real value in this project is when we raise the funds and get into construction and operations. That's when we, deliver the real value. So we are currently open to talk to whoever may be interested in supporting us, and keep us in much flexibility and keep our options open for as long as we can.
It's a game of poker, and you're keeping your cards close to your chest. Is that what you're saying?
Well, yes, absolutely. But with the product, as I said, we see that as a trump card. That is a trump card in getting this project built, because a lot of the big fertilizer producers have to buy their potash from their competitors, and they would love to be able to buy their potash from an independent such as ourselves.
Makes a lot of sense. Now, yeah. Someone here, Amin Chowdhury, I don't know if there is an answer to this one, but when do you expect the first potash to be out of the ground, so to speak, he asks. Let me just chuck that away and see if you laugh at me.
No. Well, if we can get the funding in place this year, as we're striving to do, and start early construction works before the end of the year, it would be towards the end of 2023 that the first potash would come out of the mine.
So there is an answer with a fair wind.
Yep.
The end of 2023. Yep.
So end of 23, and then ramp up production during 24, and be in full production before the end of 2024. That is the timeline that we have.
Okay, let's turn to financing. That's the other big topic. You've just brought in a really interesting new non-exec called James Kelly. What does James Kelly bring to the party?
Well, I'll give an answer, and maybe Charles can step in as well. So James, he's got sort of real live knowledge of funding, mining projects with his background, and the companies that he's involved with personally. So, if he certainly brings the ability to help us get the best deal that we can get, the best value in terms of the funding, the makeup of the funding packages, and potentially a more sort of a more direct involvement with his experience and knowledge of certain funding opportunities. But maybe, Charles, you'd just like to talk about some of the areas that we're looking at in terms of funding at the moment.
Yeah. So the one we've sort of gone for as the sort of plan A is to get a strategic investor who's either likely an industry player or even just a financial investor to come into the top co of Emmerson, and probably not a huge amount all at once, but take a position which is meaningful to the market, 10-20% of Emmerson, and therefore be the anchor investor in the equity portion of the financing once we've got the bank debt in place. And there have been various people who are in the data room sort of making that consideration. I think James, he'll be useful on that, of course, helping the board assess. But another route to us could be looking at a royalty or a stream, because it's actually a very high margin and long life.
And James Kelly has connections with Trident.
Obviously, Trident. I don't. I know.
Is that a red herring?
I don't see Trident as a potential demander of a stream or a royalty in this. I don't think it's. I think Trident's actually too small for this sort of thing. But what Trident's in a pack of a whole lot of newbies in this space, and there's been terrific demand from investors, especially in Canada actually, but also in England, for these royalty and stream companies, which means there's a huge amount of money. So it's not impossible that we find ourselves putting something like that on the table as a way of helping close the equity portion of what's going to be required.
Fantastic. Lloyd Phillips is asking lots of questions, all in a big bundle. Let me continue with the financing theme. He says it's 70-30 debt to equity split. Why wouldn't you actually go for 100% debt, which might be less dilutive?
Well, you wouldn't really get 100% debt, and if you did get 100% debt, it would likely be at a very large interest cost.
So that's not the way to do it.
The people we're talking to are the big lending banks, and 70 is roughly the right sort of proportion before you get into onerous coupons.
It's like the largest mortgage you can get on your house at a decent rate.
Yeah.
Okay. Graham, back to you. How much extra mine life are you hoping for? Asks Lloyd Phillips.
Well, we've got the 19 years is from less than 50%, so there is the potential to double it. We're actually, as part of the sort of phased approach, we've actually been looking at the southwest area of the resource, which isn't in the mine plan, and how we can bring that in, maybe bring that in sooner. But that would be to facilitate an increase in production as a potential. So I believe there's the opportunity to double the life. And there are leases.
So is it 9 currently? Would that make it 18?
No, it's 19 currently. So we'd be approaching 40. But OCP also hold exploration licenses in the area of the same basin. So obviously, if we did anything with OCP, there's the opportunity there to combine the whole of the basin, which would probably take it well over a 50-year life.
Okay, fantastic. Now, gentlemen, on that bombshell, I'm going to end your presentation. Thank you so much.